All right, so we're diving into United Airlines. Yeah, specifically their Q3 financials. Always interesting stuff.
Definitely. And, at first glance, the headlines, they're a little surprising, aren't they?
That's the thing. Strong earnings beating Wall Street's expectations even. But then you remember all that summer travel chaos, delays, cancellations. Didn't seem like a recipe for financial success.
Right, you'd almost expect the opposite, wouldn't you? Like, surely all that disruption ate into their profits.
Well, let's get into it. First things first, they're reporting adjusted earnings per share of $3.33.
333. Now, to put that in perspective, analysts were expecting $3.17. Even United themselves, their projections were lower.
So exceeding expectations in a good way, not just, oh, we messed up our predictions kind of way.
Exactly. And what makes this even more noteworthy is the context. This isn't just United doing well in a vacuum. The airline industry, they've been grappling with a lot. Rising fuel costs, for one.
Makes sense. Yeah, huge expense for them.
And then you've got inflation, impacting how much people can actually afford to travel. Plus, we're still seeing the ripple effects of the pandemic on travel patterns. So for United to come out ahead in this environment, it's significant.
Definitely not what you'd expect hearing about all the travel nightmares this summer. It makes you wonder, though, what they're doing differently. And also, maybe this is a good time to ask, those adjusted earnings you mentioned, what's the significance there? For those of us who, aren't financial analysts.
Good point. It's a term that gets thrown around, but it's worth understanding. In the simplest terms, think of adjusted earnings as giving a clearer picture of a company's profitability from their core operations,
Core operations, meaning.
their main business activities.
Yeah.
So it strips away any one-time expenses or gains, things that might not reflect how they usually perform. Gives investors a more accurate look, you see.
So in United's case, even with the summer mess, their core business is doing well, at least according to these adjusted earnings.
That's the suggestion, yes.
Okay, so speaking of that summer mess, delays, cancellations, it was everywhere you looked. Hard to imagine that didn't cost them a fortune.
It undoubtedly had an impact, yes. But this is where it gets interesting.
Because,
Because despite all that, their revenue per available seat mile, a key metric for airline profitability, it actually increased in August and September compared to last year.
wait, so even with the chaos, they were making more money per seat. How does that even work?
Strategic capacity reduction. Basically, they made the decision to cut back on the number of flights and available seats.
We definitely saw reports about airlines doing that, but at the time it just seemed like, well, they can't handle the passengers anyway, so.
Right, but there's a financial calculation behind it. By intentionally flying fewer planes, they brought supply more in line with the demand that was actually there.
So instead of half-empty planes, they were maximizing the seats they did have, and probably charging a premium for those seats too, I'd imagine.
You're catching on. It's a way to offset those inevitable losses from the travel disruptions. And it seems their confidence in this strategy extends beyond just managing the summer. They've announced a $1.5 billion share buyback program.
That's a lot of money.
Yeah,
And it's their first buyback since before the pandemic, right? Seems like a pretty bold statement.
it is. So when a company buys back its own shares, they're essentially reducing the number of shares available on the open market, which often increases the value of the remaining shares.
So it's like they're betting on themselves, saying, we're doing well and it's only going to get better.
Exactly. It's a signal to investors, showing confidence in their own future profitability.
Bold move. But I'm guessing not everyone is thrilled about this decision.
You're right. Different perspectives are emerging, and some are more critical.
Well, let's unpack the other side of this financial coin, because I have a feeling this is where things get really interesting.
So the pushback, right, it's coming mainly from United's flight attendants union. They're not exactly celebrating this buyback.
What's their take?
Well, their argument is that this $1.5 billion, it should be going towards employee compensation and benefits instead of back to shareholders.
Especially after the pandemic, right? Flight attendants, they were on the front lines of a lot of chaos and uncertainty.
Exactly. They're pointing to the sacrifices their members made, keeping things running during a really tough time for the industry. They're saying, hey, we deserve to be rewarded for that.
So you've got this classic tension playing out, shareholders wanting a return on their investment versus employees wanting better pay and benefits.
It's the age-old dilemma, isn't it? And it speaks to the broader dynamic in the airline industry. Historically, labor relations, they haven't always been the smoothest.
That's putting it mildly. Strikes, contract negotiations, it always seems to be something.
It's a sector with a lot of moving parts, a lot of stakeholders. And the pandemic, if anything, it just amplified a lot of those existing tensions.
Makes this buyback decision even more loaded, I'd say. But stepping back for a second, this is all part of a much bigger picture, right? What else is on United's radar as we look ahead, challenges and opportunities both?
Absolutely. This is just one financial decision within a whole constellation of factors. Now, United, they're projecting strong earnings for Q4. They're optimistic.
Which, after this quarter's performance, maybe they've earned the right to be optimistic. But there are always buts, aren't there?
Always. And one of the biggest ones right now is Boeing.
Ah, yes, Boeing. They've been making headlines for all the wrong reasons lately. How are the production issues over there impacting United specifically?
So those strikes at Boeing factories, they're causing significant delays in aircraft deliveries. And that has a ripple effect throughout the industry.
Hold on, back up a bit. Remind me, how crucial is Boeing to an airline like United?
Crucial is an understatement. Boeing is a primary supplier for them, a lifeline, really. So when those deliveries get delayed.
United's plans get delayed. They need those new planes.
Exactly. We were just talking about how United reduced their capacity to navigate the summer travel surge, right? Well, those new planes, they're a key part of scaling back up when the time is right.
Makes sense. Can't exactly increase capacity if you don't have the planes to do it.
It's a real catch-22. They need those deliveries to stay on track to implement their long-term strategy.
And even then, even if the planes arrive on time, there's the whole global economic picture to consider. Inflation's still a thing, right? People are feeling the pinch.
And when people start tightening their belts, travel, especially air travel, it's often one of the first things to go. It's a luxury compared to, say, rent or groceries.
No argument there. And then you layer on top of that all the global uncertainty, geopolitical risks, all that fun stuff.
Right, because as if economic woes weren't enough, you've got conflicts like the war in Ukraine. That introduces a whole other level of unpredictability.
Fuel prices going haywire, flight paths having to change.
Yeah.
It's a lot to juggle.
And it makes forecasting incredibly difficult. Airlines like United, they have to factor all of these potential disruptions into their plans capacity, routes, their financial guidance, everything.
It's starting to feel like United's strong third quarter. It's almost a double-edged sword. On the one hand, it shows they can navigate choppy waters, but on the other, it sets a high bar for the future with a lot of potential storms on the horizon.
That's a good way to put it. Double-edged sword, exactly. And that's what I'll be watching for, in the next earnings call.
Yeah.
When they talk to analysts, when they lay out their guidance, how are they accounting for all this? Because anyone can have a good quarter when the circumstances align.
No, sir. It's how you handle the uncertainty, how you plan for the what-ifs that really makes the difference.
100%. Which, thinking about everything we've just discussed, the strong earnings, the challenges they're facing, it all kind of leads to a bigger question, doesn't it?
Oh, and what would that be?
Well, are United's current strategies, this capacity management, these buybacks, are those enough to keep this momentum going? Or are there other factors, maybe less obvious ones, that are going to really determine their long-term success?
That's a great question, and a great one for our listeners to ponder too. What do you think? Hit us up on social media, let us know your take. But for now, we're going to wrap things up here.
Always a pleasure to dive into this stuff with you.
Likewise. And to our listeners, thanks for joining us for another deep dive. Hopefully, you're walking away with a better understanding of United Airlines' current position, the good, the bad, and everything in between. Until next time, stay informed, stay curious,